That's like a freight train barreling into a commuter station at 90 miles an hour, if you will, and it's going to be a pileup of stuff, and it's not going to be pretty. I'm Ed Jenkins. I'm a professor of practice and accounting here at the Smeal College of Business. The IRS is in disarray. So that's going to be a challenge for processing, especially paper submissions. So the IRS has had, of course, reductions in force. So they're down about 1/4 of their workforce. And so that means that there are fewer people around to do the work. At the same time, we had major legislation this summer. And so the OBBBA, the One Big Beautiful Bill Act, was passed this summer. And so anytime you have a big tax bill, you've got a lot of work at the IRS to do, because you've got to update forms, instructions, you've got to issue guidance and regulations to interpret what Congress did. Tax season opens January 26th, and the IRS is very proud of that because they're saying, despite the 1/4 cut in force and despite the shutdown, we're going to open on time on January 26th. So they'll start accepting returns. Keep in mind it's a reduced capacity IRS, so your best bet is to electronically file, as I mentioned, because I'm not sure what's going to happen to paper returns. In the pandemic, they threw out 3 million or 6 million 1099 forms because they just weren't going to be able to process them. So, the takeaway is early. The takeaway is direct debit for payment and direct credit, or directly have your refund deposited to your accounts. Is the big takeaway. The OB3 had lots of beneficial items that are going to increase our refunds, but the IRS didn't adjust the withholding tables. So folks continued to have tax withheld from their paychecks just like normal, but there's now a reduction. So we're going to have what folks are predicting to be the largest refund season ever. Now, the OB3 had lots of provisions. So one of the biggest provisions was to make the Tax Cuts and Jobs Act tax rates and tables permanent. They didn't revert back to the pre-2018 law. And that was a big thing. Additionally, they also made permanent the doubled standard deductions. So we have very large standard deductions, and we're going to continue this. So we're not going to revert back to pre-2018 law, which was what was in the law before. So those are two really significant things. In addition to that, there's some other benefits. The child tax credit was enhanced by $200, so it went from $2,000 to $2,200.